This episode is for first-time buyers. Like, dream a little bit,
Is
right?
it? Because I forgot where we were going.
No. But what you say is a perfect segue for where I want to go with this.
All right, welcome to episode 6, right? Don't mess that one up right off the bat. No, is it 5? Shoot, it is 5.
5. That's okay. That's okay. You know what? We're just lucky that we have all these episodes that we've already done, and we're flying through them. We're having fun doing it, right?
Oh well, it's okay. Today, we're going to be chatting about first-time home buyers. Before we get into it, welcome to the R&B Real Estate Show. Ross Bridges, Andrew Roach, trying to get you guys some good content on a regular basis and educate you guys all about the buying process, selling process, real estate in general, investments, anything that comes our way. We'll make it come your way as well.
And our slogan, guys, is we're here to help you find your way home. Today, we'll be focusing on first-time buyers. For all of you first-time buyers out there, we would love to help you find your first home, okay? So we're going to go over the ins and outs and try and make it simple for you, prepare you for getting out of either renting or living at home and moving into your first place, building equity and preparing yourself for your future.
For sure. So, first-time home buyers, super exciting, super nervous. We see it all the time. The idea of it is wonderful. When it comes down to pulling the trigger, sometimes people can just be a little bit hesitant, reluctant, get cold feet. Is this the right home? Am I buying the right one? Is a better one going to come up later? That will all be dealt with as you go through the process. Get comfortable with the process, get comfortable with the paperwork, etc. But some of the big things that you got to do ahead of time to prepare yourself to be in the best position. We talked about it. We're going to kick this. They're going to beat the heck out of this dead horse here. Get a pre-approval, right? Know what you can afford. And that means, talking to, an expert mortgage broker. If you don't got a mortgage broker and you want to use your bank, make sure it's a mobile mortgage rep and not just someone at the branch, an account manager, as they call them, or whatever. But you want to be, providing your income statements, getting your credit pulled, right? Showing your proof of down payment, etc. You want to be giving them all the documentation that they need up front so that they can tell you, based off of this factual information, this is what you can afford, not just, I make $60,000 a year. Oh, okay, well, then you can afford this, right?
On our previous episode, we touched a lot on obviously developing your credit, right? So making sure that you want to pay down any of your outstanding credit cards, lines of credit. If you own a vehicle, make sure that you're paying that down as much as you possibly can. We also touched on this in a few episodes where please do not go out and buy a car or buy major expenses before you're getting yourself pre-approved, because the banks will look on that and frown upon it from a credit standpoint. So those major purchases, I know you will do after you move into your home, right? So that way you can afford to buy a more home, which will get you a return on investment each and every year. What you can afford now, that little bit more you can afford now, is going to be a better home for many, many years to come with a better return on investment. So get your down payment in place. And for little things, like if you want to just start a conversation with a bank, reach out to Andrew and myself, and we'll put you in contact with a mortgage specialist. And if you want to just start looking at some properties, then we can set you up for some searches as well too. So you can start seeing what your money will get you when you're getting started.
Yeah, for sure. You touched on some great points. Like you said, getting your credit sorted out ahead of time, go ahead and while you're getting your pre-approval, ask them, hey, what's my credit score? What's on there that is reflecting poorly. So you can say, oh yeah, you know what? I forgot about that line of credit that I took out 3 years ago. It was a small balance and I forgot about it. Right. Or student loan, or sometimes there's a mistake. Sometimes, the algorithms, they mix up, Joe Smith and Joe Smith, and it's the wrong Joe Smith, right? And you got somebody else's bad credit. You want to find that out now. Well, you have some time to sort that out, rather than when you found your dream home and you've put in your offer conditional on financing, and you find out, the couple of days after you found your dream home that there's this blemish that's not even yours, and it's going to take you 4 months to get that sorted out, right? You just want to be ahead of that curve, right? Get ahead of the ball on that one.
I like how you talked about a conditional offer there. Let's keep it real here. They're going to need to go on firm. Now, before we started the show, I was really impressed with what you were talking about with RRSPs and how people can, first-time buyers, can use that money towards their down payment. Could you maybe go a little bit more detailed on how they can take advantage of the money they have been saving to put towards their first home?
Yeah, for sure. So the Canadian government years ago came out with the home buyer plan, which is is great for first-time home buyers, or if you haven't been a homeowner for the last 5 years. And there's some other areas that you can slide into that first-time home buyer category, if you will. But it allows you to borrow up to $35,000 out of your RRSP without being taxed. Now, obviously, you're probably if you have an RRSP, you're probably familiar with what an RRSP is. It's a tax deferral system, basically, right? I put money aside. I'm going to put it into this registered account. I pay less taxes today, and I'll be taxed on that income when I'm retired. And theoretically, that'll be at a lower tax bracket. That's the idea, right? However, if you were to take that money out beforehand, or as soon as you take that money out, you're being taxed at whatever your tax bracket is. So the program allows you to take that up to $35,000 out tax-free. And then there's a repayment plan and system that you have to follow in order to be able to get that money back in within a certain amount of time. But it gives you the opportunity to tap into that savings that wasn't necessarily allocated towards a down payment. It was supposed to be long-term savings, but it allows you to get into that in the kind of shorter term, so that you can get into the home ownership world.
Awesome. Yeah. Now, one thing we want to educate you on is all of the different costs involved in buying a home, right? Obviously there's going to be legal fees. You could have a home inspection, land transfer tax. If you are in Toronto, be prepared that there is a double land transfer tax. It's a stinger. That's why they come out to the suburbs, Milton, for Andrew or myself in Oakville, Burlington. We'll only tax you once. But all joking aside, you need to be mentally prepared. There is also a $4,000 first-time buyer rebate right now, which is amazing incentive for all of you entering out there. You could get additional things like title insurance as well too. Making sure that knowing what your down payment is. CMHC would like to see 20%. You do not have to have 20%, but it's strongly recommended to get and we could talk about interest rates. I mean, Andrew, your background actually before you got into real estate was as a mortgage specialist. Maybe you could touch on briefly how people can qualify for these amazing low rates right now versus working with a B lender or having just higher interest rates. And we're not talking about different products, just to keep it simple for how they can qualify for a lower rate.
Yeah. So, I mean, you talked a lot of lingo there, and I'll try to remember all the stuff that you said to kind of explain what it is in case people aren't familiar with it. But, okay, so you talked about CMHC, right? That's Canadian Mortgage and Housing Corporation. Mess that up in my head there for a second.
I would have messed it up worse than you, so don't.
So the rules, banking rules in Canada is if you put less than 20% down on your house, that it needs to be insured. And one of the main insurers is the CMHC. There's some other third-party insurers like Genworth and the newer one, which they came in just as I was leaving. It's escaping me right now, but there's a third one as well. But ultimately what they'll do is they basically add the insurance to your mortgage, right? So if you put less than 20% down, you're paying a bit of a premium on top of your mortgage. You don't have to pay it up front, but it does get added to your mortgage balance. So you can put, as little as 5% down, and that would be insured. And in fact, kind of skipping a little bit here, you talked about A lenders, B lenders, et cetera, all that kind of stuff. The banks actually, sometimes you'll get a better interest rate if it's insured than if you put 20% down and it's not insured. Though some lenders will, even if you put 20% down, they will insure it themselves on the back end. You don't have to pay for it, but it's still insured, right? So there's a lot of stuff that happens to it. But just know that as far as interest rates go, you might, when you're shopping around a little bit, you might get the better interest rate if you put less than 20% down because it's insured. Do the math. Might be in the long run cheaper to take the insurance premium, put 15% down, or put 18% down, or whatever. It doesn't really matter. You can put as little as 5% down, but if you're buying over $500,000 and under $1 million, then that down payment will be boosted up a little bit more, right? So the rules right now is if it's 5% down if for anything that's under 500,000, and then 10% on anything between 500 and $1 million.
$1 million, yeah.
So, depending on where you're buying, you might end up being around 7% or something like that, 7.5%. Who knows? Depends on where you are buying in that bracket, right? But just be aware that that's going to be your kind of minimum down payment for the most part. So know that you have to have your down payment as well as your closing costs, like you said, Ross, which your closing costs would include your land transfer tax, double land transfer tax if you're in Toronto, lawyer fees, which if you're buying just the one side, $1,500 roughly, $1,800 depending on the lawyer, and oftentimes that will include title insurance, which a lot of lenders will require these days as well, and that is kind of potentially encumbrances more, but somewhat in lieu of a survey sometimes. Basically just says title is going to be good. The property should be as it is. There's a lot more to it within kind of being in a whole episode just on title insurance, really. But
you don't have to get title insurance. It's a good thing to have, but you don't have to. With land transfer tax, there is a cool little equation for it, but it's basically 2% or a little bit less than 2% of what you're actually going to be getting as well too. Now, I mean, without scaring you first-time buyers, I know we're talking a lot of numbers here. It is actually pretty simple process. We want to make sure, obviously, that you know what you qualify for. So a lot of it is just filling out some basic applications, getting it over to the bank, and then making sure that, like, on my website, I know Andrew on his website has all of these costs and cost calculator for a mortgage, for the land transfer tax as well too. So you can basically just do some basic calculations and figure out. There are lawyers out there just on the buy side that will do things for under $1,000. I know that if it's a buy and a sell, it could be $1,500, $2,000, throw in some wills, whatever, right? There's all these additional costs. But for you overly analytical consumers out there, one of the most common things I hear is, oh, I should have bought last year. Or I should have bought, why didn't I buy when I first started looking? It is a process. If you start now, don't be afraid to go out and buy a home and build your equity and start building for your future, right? It definitely is a process, and that's where we get involved, and it can be fun too. We can educate you, go out, look at some homes, and then make sure you get a feel for what's appropriate for you. So, don't be afraid to get started, and it could be as easy as calling Andrew Roach or Ross Bridges, and we'll put you in contact with a trusted mortgage specialist, set you up to look at some homes. Heck, we could even take you out to look at some homes. So it's just it's honestly the best thing for you. Our previous episode, we talked about renting and leasing. And honestly, we would much rather you get off on the right foot and buy your first condo, or you're buying it with a sibling, or maybe your parents are helping you out, or you're buying it with a friend. Heaven forbid you buy it with a friend and then you both sell it in a couple of years and you have all this equity that you built, versus starting off on the wrong foot and building debt. So, I want to give just a kind of, without wrapping your heads around too many numbers here, give you a little bit of just common sense for just going out to look at homes, right? Have some fun.
Yeah, for sure. You had said, you were talking about, like, the more analytical people, the people maybe a little bit more cautious, et cetera, wondering when they should buy, should have bought last year, et cetera, second guessing themselves. You know, I've been asked countless times, when's the best time to buy a house? And my answer is like, it's like now, right? Or yesterday, like as soon as possible. And we've touched on it, like the market is gonna go up, and not long term, right? Is there going to be a pullback? I think there will. Ross doesn't think so. My wife doesn't think so. That's fine.
I'll say that I think there's going to be a cooling. I think that the markets have overheated too quickly, but I think we're still gonna be in a strong seller's market for the whole year. I think that hopefully now, and we're talking about first time buyers right now, right? First time buyers right now, there's a lot more people looking to enter at that initial market. So another thing that Andrew and I will do is we'll talk about the segments of each market, people moving up in the market, people looking to buy their dream home, right? But for you first-time buyers out there right now, there are a tremendous amount of people wanting to enter the market at 3, 4, 5, 600,000 when they're purchasing a home. So you need to understand that there's always going to be a very high demand for that prices. Now, condos, if you're looking at condos, very safe first time to buy. We've also touched on before, like buying new builds, right? You just had a success in buying a new build. A new build is a great way to buy for your first time buyer because it's controlled payments. You can put down payments every so often, every 30 days, and you'll know in 18 months where your mortgage stands, and your property would have already gone up a significant amount before you've even set foot into the property. So that is a really great way for first time buyers to enter into the market. You just want to make sure that you're looking at your options. So whether you're buying a condo or you're buying a first time, but for you first time buyers, I do think that the earlier you can get into the market, I know the earlier you'll get into the market, the better, because like we've seen long term, prices are only going to go up.
Yeah. So, okay. So that was a very long-winded way of saying not exactly. Okay. So Ross doesn't think it's going to necessarily continue. I think there's going to be a pullback. And like you said, whether it's this year, whether it's next year, I don't know. Like you said, prices have gone up, too far, too fast for it to sustain like this. A lot of people are hoping for a plateau, which I think would be nice. That it just kind of levels off and it, just becomes a little bit more of a balanced market.
That'd be great. It would be fantastic. Do you think, and this is a great episode for our next show or another show, is have the markets overheated? Are they now? They've gone too fast, too furious, too quickly?
Well, hang on to that one, because otherwise this is going to end up being the next show. So I digress. When's the best time to buy? I think it is as soon as you can, as soon as you get into the market, and know that somebody might say, well, what if the prices come down? What if I buy today and next week the price is correct and I could have bought it for $40,000-$50,000 less if I had to just wait it? Okay, fine, maybe that'll happen. But what if you wait and the prices go up $40,000 or $50,000 more, right? And now you're paying $40,000 or $50,000 more than you wanted to if you had just bought it today, right? So
a lot of people will wait 6 months and they'll see the prices go up for 6 months just to see prices go down for 2 months.
Yeah.
And if you want to be that perfect, do you know when the best time when the best time to buy a home was? 6 months ago, when you can look back at the history of the markets and say, oh, well, this is the low point in the markets.
Yes.
We have predicted, when the best time to buy a home was? A year ago when the pandemic started. And it was right about now, middle of March into the middle of April, there was a little dip because we were all scared. We didn't know what to do. But we couldn't have known then that was going to be the only opportunity for a small correction. So going forward, we have had 2 corrections. in the last several years. We had one this time last year in 2020, and there was another government correction back in 2017. So even though our prices continue to climb, we are also living in arguably one of the best places to live in the world, you
Oh,
know?
for sure. And that's why I would say that it's important to get into the market as soon as you can, because long term, I think that the Canadian real estate market is, or especially the GTA, Vancouver, Montreal, big cities or big areas, right? Even like I say the GTA, and I shouldn't say that, like Southwestern Ontario, right? Like because KWC, even London, like there's lots of like kind of like quote unquote smaller markets than Toronto that are going to benefit from the effects of people moving into the GTA, right? And so I think long term, like you said, Ross, like Canada is arguably the best place to live in the world, and we have people coming here, flooding in like crazy, trying to put down roots here to be part of the greatest nation in the world, and they need a place to live. And we aren't building enough to really keep up with that demand. And if we are, it's barely, right? And so people are moving around, right?
And without jumping into our next episode that I think should be a doozy, if you think about it, when the borders open up,
yeah,
there is going to be a massive amount of people wanting to move into our country. And a lot of them are already Canadian citizens. A lot of them already have their residency and they're coming back into our country. So has the market overheated? Is this maybe just the calm before a second storm? To be continued.
To be continued. Yeah. And so, Ross, you did kind of talk about, having two corrections. I wouldn't necessarily call last year a correction, as it was more of like a pause. Certainly 2017 was a correction. That was very much what we're seeing now, where just a very quick increase in prices. And then all of a sudden, all the supply came on the market. And we had about approximately a 10% pullback, but it only took a year and we were right back to where we were. And then it's been up from there. Right. So.
No, and I like what you just said. It's maybe I shouldn't be labeling what happened last year as a correction, but prices went down.
They did. They pulled back. But again, it was like you said, I guess
there's opportunity to buy below market value.
There was, I agree. However, I didn't personally see, and maybe what some of the what you were seeing in your marketplace might have differed slightly. And again, you might have been focusing on a segment of the market, and I was looking at a different segment of the market. But in my experience, I felt that buyers went away, but so did sellers go away, and the supply demand stayed in balance at the time, whatever it was going in. Because if you remember, I don't know if you remember this, had the same experience, but the beginning of last year was very busy. And
it was crazy. And January 2nd, it was going bonkers to start 2020.
Absolutely. And I think that we already had that demand, right? So what we're seeing this year was going to happen last year. But then coronavirus hit, and then there was this big pause, and then there was all this and all that. And I think that as people kind of got used to, okay, this is coronavirus, the world isn't ending, life goes on, here we go anyways, right? And then you couple that with, there are a bunch of people that are afraid to put their houses on the market, and I've spoken to them, even a year later, kind of seeing like how this is going. They're still not comfortable putting their house on the market, and that's fine. But what that means is that's less supply than would have been on the market normally, with still the same amount of demand for the most part.
I couldn't agree more. I mean, I love what you just said there. We had a couple situations that the markets were kind of getting held back over the last few years, right? And these are things the government announcements, I think that looking back at it, that was not necessarily a bad thing, right? I think it was made for more long-term sustainability in our market, which is what we desperately needed at that time. Things were getting too out of control too quickly. And I fear that we're going to be facing that again now. Now, I love what you just said about there's segments in the market, right? We have all these different segments where different things were happening in different areas. And the reality is yeah, there's going to be a lot more construction. There's going to be a lot more new builds, and things that we've talked about in terms of where people are going to have to be moving a little bit further out, is going to be the future, right? We're going to have to look for other communities that are further away from the GTA. Like your brilliant mind was commenting on how we're going to have to be targeting areas where there's high-speed internet, right? Like that is the future. That is thinking 2 steps ahead as to where we need to be down the road.
Yeah, and thankfully, the government has put I should say programs, for lack of a better term, in play where they want to, basically get Ontario and the country on high speed internet within a certain time period, right? Knowing full well that, there's an immense amount of talent that can be brought to market to, tap into the economy and help us grow, that don't necessarily need to drive into an office building 9 to 5 and don't want to drive into an office building 9 to 5, but are perfectly capable of doing exactly what we're doing right now, right? Doing a Zoom call, having virtual meetings, do their work at home, upload their work, to the cloud, et cetera. And they don't need to be in the center of metropolitan area in order to be able to do that, and nor do they want to. So they're going to say, listen, I have the talent, I could do that, I would do that, but not by trading off my quality of life, right? I would rather live at the cottage and do that, right? I'll work my 6-7 hours a day, just like somebody else would work their 7 hours a day, punching in and punching out. But I'll do it from home, and I'll be more productive, and I'll be more relaxed. And I've got the lake right there that afterwards I can go jump in the lake, right? Like there's lots of people like that.
And just to reach out, I mean, this episode is for first-time buyers. Like, dream a little bit.
Is
right?
it? Because I forgot where we were going.
No. But what you said is a perfect segue for where I want to go with this. For
Okay.
first-time buyers, dream on what you want your lives to look like. You could be further out. If your work allows you that freedom where you don't necessarily have to be going into Toronto, where you have a little bit more versatility with your lifestyle, then we can connect you with some of the best realtors across Canada. It doesn't even have to be Ontario, but I mean, let's keep it real. Ontario is amazing for, especially for return on investment. If you're looking for other lifestyles, like going out to BC or anywhere in Canada, we're blessed. But you have the option of maybe not necessarily just having to work 20 minutes away from the downtown core, right? So you can have that freedom, and I'm glad you brought that up, Andrew, because it allows all of our first-time buyers on this call to dream a little bit and know that they're not just forced to be living close to the cities.
Yeah, for sure. And everybody, I think you touched on this, comment that you had made as well, right? Is, like, just look at yourselves. Who are you and what's your lifestyle and what are you gravitating towards, right? If you're like a life of the party, you got to be around the crowd, like to go out all the time. Okay. Yeah. You're probably going to be you want to be in the city or close to the city. But if you are the type of people that are just, keep to yourselves type of people, you've got your close group of friends, and then that's kind of it. And you enjoy the outdoors or whatever. Yeah. You know what? You don't necessarily have to pay, high prices to be close to the action, so to speak, if you're not going to use it, right? So, I mean, that would be great to live in this kind of a smaller town and enjoy the outdoors and, go snowmobiling all the time or go ATVing or dirt biking or whatever. And just be quiet and be around nature, whatever, right? Just, understand that there's tons of options available for you as far as real estate and lifestyle goes. You don't always have to be close and or have that big long commute. There's a field that you'll be perfect at that has options to work virtually. Who knows?
Awesome.
Before we wrap it up, because I know we're pretty much going to be hitting the clock here, I do want to just kind of like recap and touch on a couple of things as far as, getting into like buying your first home. One thing I got down on my list here to talk about, but we got diverted because I'm pretty good at that, is, are you going to buy a condo or are you going to buy a freehold? Right. And again, going, touching on, your lifestyle and quality of life, or what are you into and all that kind of stuff. There's pros and cons to both, right? Most people are going to say, oh, well, I'm a first time home buyer, I'm going to buy a condo, because that's the price point that is usually going to be more accessible, right? Is going to be condominium living. And there's advantages to, having that condo fee applied to your debt service ratios, where they only apply half, right? So if you've got a $300 a month condo fee, you only have to put in $150 a month, right? And, good for people that maybe, don't have a big savings on the side. So, one of the downsides of freehold living is, the AC is yours, the furnace is yours, the windows are yours, the roof is yours, right? Big ticket items that when they go, a roof, 10 grand, right? Furnace, $4,000, AC, $4,000, right? That kind of stuff. Windows could be 20 grand if you got to replace some windows. Of course, you can replace them one at a time, but those are big ticket items that in a condo, in condominium living, depending on what's included and what's yours and what's not, a lot of the time, most, if not all of that, is covered by the condo board, and you're just paying into the fund, right? So it's stuff that you don't have to necessarily worry about going wrong over the next couple of years.
I'm going to interject for just 1 second on that. I couldn't agree more with what you said, but with the purchase of a condo, it is strongly advised that you always have a status certificate reviewed. In older condominiums, especially, they could be younger as well too, but sometimes there's a situation where there could be certain failures in the building. There could be like balcony failures, for example, under issues with the underground, windows that need to be replaced, certain big ticket items where the reserve fund does not have enough money allocated. The reserve fund is all the money that's collected from the condo fees to pay for.
Is the condo savings account?
Thank you. The condo savings account, where there is something that would be referred to as a special provision, which is an additional fee that condo owners would have to pay to have those windows replaced, or to have those balconies fixed, or so on and so forth. So just be prepared that, like, sometimes if you're buying a condo and you're going in firm, that there could be additional costs on top of that as well too. And one of our jobs, Andrew and myself, we pride ourselves on, as do most realtors, is to protect you in what you're moving into. You're going to have a lot less overhead with a condo than you would with a freehold, but just something to be cognizant of.
Yeah, for sure. Again, comes down to, the style of living that you're looking for. What's your lifestyle, what's your budget, where do you want to live? And they got pros and cons of each. So, when the time comes, or even before then, reach out. Hey, let's have a discussion about condo living. Let's have a discussion about freehold living. What are the big differences? What are the big pros and cons? And that would just be a bit of an assessment for us to ask you questions. What are you going to use? What are you going to not use? What kind of reserve fund do you have? What kind of savings do you have? Ask yourself those questions. You probably come up with the answer to what it is, right? But
we have getting started packages, and one of the things that we can do as realtors, guys, Andrew Roach, Ross Bridges, is we can give you a plan and help make it really simple. There's no cost involved to calling us. We will give you some free advice, whether you want it or not, because that's kind of what we do. But we're here to support you and help you, and obviously give you that right start for buying your first home.
Awesome. That sounds like a great way to wrap up this episode. And we've got a lot more topics coming your way.
I'm Ross Bridges, and this is Andrew Roach. We are the R&B Real Estate Show, helping you find your way home.